Alright, hello and welcome to Camel Finance. I'm your boy Camel, and I want to start by issuing a warning. Do not download the Ledger app from the Microsoft Store because it's malware. So only get it direct from ledger.com. Volker said that somebody he knows just had all of his Bitcoin stolen. So don't do this. Don't download anything apart from directly from those issuing websites. The app asked for the seed phrase to be typed in several times and it kept rejecting it. So another warning, never ever type your seed phrase into a keyboard, into a computer keyboard. You don't have to do it. What you can do is choose a different way on the actual cold wallet so that it will give you the option for the words and you can click using the mouse. Some of them do it where you can scroll through on the actual wallet themselves, but never actually go and type the full word or even part of the word into a computer keyboard, because if your computer has been compromised with a keylogger, then they will be able to easily steal all your crypto. So never download anything unless it's direct from the manufacturer, the issuer, and never purchase a wallet unless it's not directly from them, and never ever type your seed phrase in anywhere. Do not take photos of your seed phrase. Do not store it on your phone. Do not do anything like that. Remember, you are responsible for your own money. That's what makes crypto so special, but it also means you're the security department. So take the necessary precautions. We're coming off the back of a CPI print that was high. We got a hot inflation print as of yesterday. Peter Schiff says at 9.1 year over year, this is the highest since 81, but the real inflation is 18%. So I've been saying this for a while. Real world inflation is significantly worse. If using the old CPI calculation, we're actually at 75-year inflation high. And so, of course, they changed it during the C19 era to hide the fact that they were printing insane amounts of money. So this is what the CPI graph would look like if they didn't fudge the data. The Fed's Mester has said they haven't seen any solid proof that inflation has peaked. So we'll see about that. Remember, they're going to keep coming up with any excuse that they can. In 2021, it was, it's 6.2%. Transitory, 6.8% greedy corporations, 7% supply chain bottlenecks, right? Then we get 7.5% supply chain bottlenecks, and then oil prices, and now it's Putin's fault. And so insert excuse. Who are they going to blame it on? No one really knows. I don't care, frankly, but we do know they're going to continue to do this. And then at the same time, they're going to mock you to your face and tell you that the fact your pay rise is small and significantly below inflation, you should be happy about that. Yes, really, pay rises are getting smaller, and that could be a good thing for workers. I mean, if you don't want to opt out, I don't know what's wrong with you. Moving on to the news, Celsius has actually announced they're filing for bankruptcy. I didn't actually see this coming. It sounded like they were paying off their loans, sounded like they were maybe going to get away with this, and their liquidation price was down below $3,000 or something. So I don't know, but out of the blue, they're now filing for Chapter 11 bankruptcy, just like Voyager has done recently. So again, not your keys, not your crypto. Take ownership. Trust no one. Bitcoin and crypto are going to be regulated as financial assets by the central bank in South Africa. So this is progress, I think, and it will allow more mainstream adoption of Bitcoin. This comes at a time when the 30-year treasury is inverted with a 1 year. So that didn't even happen during the pivot of 2018 and 2019. So the Fed is really hell-bent on making history, it seems here. Something to keep an eye on. Social Security recipients are on track to get a 9.8% hike in their checks for 2023. While the trust fund only earns 2.7% on the treasuries that they hold, so the real wage growth is at negative 4%, which means the trust fund is going to go broke, or it's going to have to liquidate treasury holdings at an ever-increasing pace. And when they do this, quantitative tightening is going to have to end. They can't just keep tightening when these companies and these trust funds have to liquidate all their treasuries. They're going to have to print, and they're going to have to supply. They're going to have to be the bid, because as they liquidate these treasuries, who's going to buy them? Who's going to buy a negative 4% yielding guarantee? No one. Okay, so they have to print. They have to pivot soonish, let's say. I've been saying September. We'll see if I turn out to be right or wrong about that. 175,000 ATMs will be Bitcoin enabled in a partnership between Digital Mint and Hyosung America. So this is more mainstream adoption. We love to see it. With regards to US rates, have we seen this movie before? The configuration of treasury yields is starting to look a bit like the fall of 2018, and with a 2-year exceeding the 10-year, as a 10-year rolls over, have we reached an inflection point? Well, it certainly looks like we might have. And then when you couple this with the outflows from the financials, they look to have bottomed. The selling pressure is subsiding, the bears seem to be exhausted, and you can see that here in the dark blue line, which is the financial flows 4-week MA, moving average. This is starting to turn up. The light blue is trending up as well, which is the financial flows, and they're just starting to potentially turn into the positive. So are we going to get this bounce? It looks like we're right in the timing band for the cycle low over the next couple of days. But make no mistake, this is what a central bank policy error looks like. Okay, you can see when we are pink shaded here, this is when the yield is below inflation. And in green, this is when you've got yield above inflation. So you can see this is not just a small policy error, like back here or back here. This is an enormous policy error. This is the biggest one we've ever seen. They are deliberately blowing this system up, and they're going to have to change course pretty soon, I would think. The scary inflation expectations are fading. The market, which until recently was all about pricing in ongoing inflation, now seems focused on the risk of a policy error and recession. So this is what I'm talking about. We've got this policy error from the central banks, but we've dropped. I showed this chart a couple of weeks ago, and we were at just over 2, about 2.02%, I think, something like that. So this is pricing in that we've seen peak inflation. Now, whilst all these CPI indicators are lagging, and whilst I wouldn't be surprised if we saw a higher CPI print next month, everything else is kind of telling us, and this includes commodities. If you look at the commodity prices, they're all getting hammered. And so this tells us that we should be open to having seen peak inflation in the not too distant future, if not already. Bitcoin has printed a pi cycle low confirmation. So whenever it's done this historically, it has indicated the bottom for Bitcoin. And I think what would be kind of interesting here is, although I think it's most likely we get one of these sort of net sideways moves or an uptrend followed by a downtrend into the end of the year and then we go, the thing that would catch everyone off guard right now is if we just went up. What if that's the bottom and we just go up? How many people are prepared for that? Probably not very many. Like everywhere I look on Twitter, everyone is saying that we're going to 12 to 14k. That seems guaranteed. A lot of people think we're going 10k or lower. I've even seen some 5-6k Bitcoin calls. I mean, that's absurd. There's no way. I won't never say never, but I think everyone's incredibly bearish right now. And something that would certainly catch a lot of people off guard is this. Just straight up, right? So we'll see. Ethereum's NVRV Z score is pointing to Ethereum having bottomed as well, and has even started to turn up. So have we seen the bottom for Ethereum? Possibly. Jim Cramer tweets the other day, last bad number. So hyperinflation incoming, right? Obviously there's no one ever more wrong than Jim Cramer, but the reason I flag this is because the Financial Times, even mainstream media has realized this, right? And Jim Cramer is saying that inflation has peaked, which leads us to worry that it hasn't. JP Morgan have come out and said that Bitcoin mining cost of production has dropped from 24 to 13k per Bitcoin. Now, I asked Adam back if this sounds feasible to him. I'm not sure if he'll get back to me or not. I will update you if he does. But I don't really think this sounds right. I think this sounds like a bit of fake news and FUD. I went and checked the hash rate, and we are down from 228 to 205, right? But even though that's the case, I went and found this article. You can go and check this out for yourself in your own time. But 175 exahashes this calculation is based on, right? And we're currently at 205 or whatever. So significantly harder to mine Bitcoin currently. And scrolling down, they have used a 100 terahash per second machine, 3400 watts and 34 joules per terahash efficiency. So this is an efficient miner. Okay, this is a very efficient miner, very powerful ASIC. And they've used that to calculate it. And again, if you want to go and check the maths and see how this is done, feel free to go and check this out. But the point I'm trying to get to is they find that the average cost is 32,000 per Bitcoin over the course of 5 years. Now, this is not the most efficient miner. Some of the most efficient miners can do this at a discount, so down to about 18 or 19,000 a Bitcoin. And that's the very most efficient miners. But I think to say that 13k per Bitcoin, I think this is just absurd. And I think this is, again, fits with that same narrative of 12 to 14k Bitcoin being a trap, being a crowded trade. Like, I'm not saying it couldn't go down there, but what I am saying is I think an awful lot of people are banking on that, and I'm personally not convinced that we'll actually get all the way down there. So anyway, if Adam comes back to me and lets me know what he thinks, I will certainly update. and let you know about that. Just before I go, I want to remind you the WEF, World Economic Forum, didn't plan on Bitcoin, and it will be their downfall. Whoever holds the hardest money ends up with the most power in the long run. Bitcoin gives institutions the incentive that would otherwise have gone along with their plans to break ranks. And this is true of everyone. So if you want to stand a chance, if you want to have a hope at getting out of this reset, if you want to have a hope at not being a digital slave, not being forced into accepting CBDCs, to having your own sovereign wealth, then you can opt out using Bitcoin. Make sure you take ownership of your keys, not your keys, not your coins, right? There's links in the description or comments or both for cold wallets from the suppliers directly. So if you're interested in that, go ahead and get that. And if you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already. Hello and welcome, and thank you to the new subscribers. I appreciate every single one of you. And there'll be more TA coming from me tomorrow, but at the moment, yesterday, kind of not much has changed since yesterday. So you can see yesterday's videos for the TA. I will do a TA update tomorrow. And until then, I wish you all the best. Take care. Cheers. Bye.